evening and welcome. You're watching ET Now. The show is GST and You, and I am Ruchi Bhatia, and joining me from Mumbai is my colleague Ashwin Mohan. As usual, over the next 30 minutes, we will take your queries and tell you how to be more compliant with this new tax regime, that is the GST. Joining in also on the show are our top tax experts, Shrikant Kamat, partner Indirect Tax at BDO India. Also joining in is Uday Ved from Mumbai, and of course Bipin Sapra, Indirect Tax partner at Ernst & Young.
That's right, Ruchi. We're going to try and make this show as interactive as possible. We're also going to get some live questions from our special app, Involve. And these are queries that are pouring in from all parts of India. And of course, that's not all. We'll also get in some live callers on the show. Let me kickstart today's show with the buzzword as far as GST is concerned. And one aspect that has definitely hogged the headlines is the anti-profiteering norms. Shrikant, let me kickstart the show with you. If you look at the anti-profiteering measures, now there seems to be a concern in the entire industry that if one way to avoid anti-profiteering measures, whether the retail prices of the existing stock in the market, should they also be reduced merely because it will be sold in retail after 30th June? What's the take on that?
No, I don't really think that the government is even expecting you to reduce the stock, reduce the price of the stock that currently the retailers are holding, because that stock any which ways is bound to be a stock which was supplied in the earlier regime. So somewhere I think there is a fair amount of understanding with the government also in terms of the pricing that needs to be reduced. But definitely, I mean, beyond a certain point in time, the reduction in price has to kick in. For that matter, in fact, most of the automobile companies have been proactively announced a substantial reduction in price, and I mean, we should really commend them for that. That immediately you could see on the 1st of July itself, there were very large-scale public announcements by most of the consumer goods companies. So I think while the industry is taking a proactive approach, but definitely it is not expected that the existing stock requires to be priced a little lower than the existing MRP.
All right, that's a very important clarification coming in from Shrikant. Uday, I want to rope you in on the discussion as well. As promised, we want this to be an interactive show, and therefore I'm going to take the first question, the first involved question from our viewer Rohit Dhawan. And this is a question which he has on excise-free zones. Now, Rohit says, there are excise-free zones which were exempted from excise duty for 10 years, till 2020. He is curious to know what will happen to them, Uday, under the new GST regime.
So GST is supposed to close out on all the, in terms of the chain has to be broken, and everything will be now subject to excise. But if that exemption has been given in 2020, then a refund will be given. But first, the tax would have to be paid, and then refund will be given. So that promise, what government has said, will be kept. To that extent, that could be a working capital issue. But in order to come into the system, from July 1, 2017, when the GST kicks in, the chain has to be broken. So it will be paid, tax will be paid, and then the zone will refund the tax.
Right, so those are preliminary comments. Ruchi, over to you in the Delhi studios.
You know, Ashwin, also a lot of queries are coming in with respect to what do you do as far as registration goes. And Ashok Kumar asks us that for individual registered with GST only for rent, can he claim input credit on goods and services purchased for personal use? Bipin Sapra also joins in our Delhi studios. Bipin, how about you take that question?
The answer to that question is that if an input or an input service has been used in furtherance of the business for which he's paying the GST, then the credit would be available. So if he's giving out something on rent and he's managing that company and any input or input services is going there, then that can be taken as credit, but for his personal expenses obviously cannot be taken as credit.
So personal expenses cannot be used as credit. But Bipin, if you can help us understand, if one has a property that you're renting out to someone, but that's not in the place where you're residing currently, it's in some other state, then how do things work?
That's an interesting question, and I get this question a lot of times. See, what happens is that the place of supply of properties is linked to where the property is located. Now, a lot of time it so happens that there is somebody, a caretaker or a caretaking office which is located out there, and you need to register there itself and pay the tax, and it would be a local supply, something like what a hotel would do when it would raise an invoice to a customer which is coming there. In this case, you would have to raise an invoice locally. But a lot of time it so happens that you do not have offices at all there. There's no person looking after that property, and you are giving out the entire property on rent. In that case, there is a certain bit of ambiguity where the first reaction is that you take in, you get registered where the property is. But international law and other jurisdictions where this has been implemented, you could actually do it from where you are providing that service and provide an IGST supply. So the debate is still out on there. It's easy and more compliant to be registered where the property is located and pay your tax locally.
All right, it's important to pay your tax locally but also be compliant, and you cannot claim input tax credit if you're using a property for, or if you're using goods and services for personal use. That's an important clarification coming in. But Mr. Ved, I want to pick your brains on another important bit, and our viewer write to us. They're saying under GST, should we take 2 separate registration numbers or one PAN-based registration across India if operations are in many cities? Because that's a query coming in from, not just, Rohit, but many other people who are writing to us. They want to know, what do you do if you have operations in multiple cities? How do you deal with your registration and then claiming input tax credit?
So the taxation under GST is now on the destination, which is consumption, and on the basis of supply. So if you have operations in multiple states, and if you are supplying goods from those states, then you need multiple registration. The GSTN will give you registration per state, one registration per state. As an example, you have operations in Maharashtra, then there will be one registration in Maharashtra. If you have also a place of supply or supplying goods from, say, Gujarat, then you will need a separate registration in Gujarat. But if you simply selling goods from Maharashtra to Gujarat and there is no other place of business, then you don't need registration. So per state, one registration where there is a supply of goods. Within the state, you might have different places of business, so that will be an additional places of business. There, one registration per state will give different places of business. But separate registration for each state required when there is a supply of goods. If not, then as in my example, if simply selling the goods from Maharashtra to Gujarat and not doing anything else, then a registration in Maharashtra would be sufficient. Per state one registration.
Right, Mr. Ved. Now, clearly all our panelists are aware that as far as the new GST regime is concerned, there are a lot of interlinkages between several stakeholders. You have suppliers, you have manufacturers, you have retailers, and it eventually boils down to a question of trust, that everybody follows the rules by the book. But there's an interesting involved question, and this one's come in from Amit Saini, and Shrikant, I want you to take this one. Amit asks, my suppliers haven't registered for GST as their overall turnover or revenue is below 20 lakhs. I have registered for GST because my overall turnover or revenues are more than 20 lakhs. Will his supplier's non-registration, Shrikant, affect Amit in any way?
Yeah, I think it's a very valid question, and I think a very interesting shift from the earlier regime in terms of when you buy from unregistered taxable persons. And if you are a taxable person, if you are a registered taxable person, in fact, the burden of tax payment has been put on you under a reverse charge by the law, by the GST law, and that is only if those supplies are valued at rupees 5,000 or more, then you have a burden to pay the tax on those supplies. So you have to be mindful, and you have to continuously track your procurements above rupees 5,000 every procurement, and ensure that you pay tax on those procurements. And at the same time, you are also issuing a payment voucher to the supplier, and somehow the government wants to ensure, not only ensure that the tax is paid, but it also is interested in tracking your purchases. So you are required to issue certain documents, prescribed documents in the prescribed formats, and also disclose on an aggregate basis all your procurements for the month in the returns that you will be filing. So these are your obligations in terms of purchasing or procuring from unregistered persons in the GST, whether they are providers of services or whether they are suppliers of goods.
All right, Amit Seni, there you have it. Shrikant Kamat spelling out how you can safeguard yourself if somebody else in the supply chain isn't registered. On that note, I want to pose a question to Bipin Sapra. Now, Bipin, there are two sides to this coin as far as the preparedness of the GSTN network is concerned. The government is really bullish, but there are some who feel that perhaps it would have been better, Bipin, if corporates had got a chance to come out with any sort of test transactions for GSTN.